Hey, good afternoon, everyone. Trader Tim from eMiniMind.com. Taking a look at the week in the markets here on the ES. I was out on Monday as well as last week, Thursday, Friday. Took a little trip to out to Lake Tahoe. Pretty nice out there. If you haven't been, I would highly recommend it. In that time, we had options and futures expiration last Friday. And as we were talking about last week, those weeks are usually pretty meh between rollover and expiration. And we just kind of saw a couple of sideways days, nothing too big. But then this week we had a nice little pullback, and you can see I've got the low to high 50 drawn, 27.35. Well, if I draw from highs to lows, that gives us a target, this 27.71s, right at the long. So you can see how I kind of play both sides, the long and the short. Now, since the short traded first, you can look at riding that down to the 50%. And you might be saying, well, I don't like to hold my futures trades overnight. And, ditto. I'm right there with you. So what you can do is come over to the SPY and simply put on the position in the S&P, either the underlying, or you could use an options contract. You can even use an options on the futures, and just make sure you do your research. I've got a whole post about that over at eMiniMind. If you just search weekly options, but whether you're trading the underlying or the option, using using the SPY as a vehicle to take advantage of a daily move is a lot safer, in my opinion. Like I said, I don't like holding my futures contracts overnight just because the risk is so great. And basically look to ride that down to the 50%, and that lines up with the negative 23% retracement. Now, I wanted to talk about the market profile a little bit. If we pull up the last couple of days, so here's today, we had the move down. This most of the trade occurring in and around trade from 2 days ago, that value area highlighted in gray here. Well, if we go to yesterday's trade, we had the gap up, and look where we closed. This value area encompassing, right inside the last couple of days, and that point of control lining up very nicely with the previous couple of days. These yellow and blue up here are just the unfilled gaps, and you can see how the market likes to gravitate towards prior closes that are unfilled, as well as previous value areas. I took a screenshot as I was making my profile yesterday, and you can see this yellow is the unfilled area, what was above us that we traded into yesterday. The blue is the close that remains unfilled. But notice how we gapped up. We were kind of right in the middle. We basically gapped up right to the point of control from these 2 days back here, and then spent most of the day within these big value areas. So whenever you have kind of day after day where you have point of control and value area kind of lining up, those are likely places, if we do move into or close to that previous point of control here, there's a good chance that we're going to kind of stay within that area. The likelihood that we're going to break out and trend is a lot weaker. And so that was just one thing that I noticed yesterday, whereas today, opening up, notice that we opened up right at the bottom of value area and then immediately moved down. And so the likelihood that we were going to trend was much greater. We had this value area back here, but it was pretty wide. And when you have a wide value area, that usually equates to a fairly narrow set of columns, the TPOs. So price is a little bit thinner as opposed to the wider columns where more price traded. And so the likelihood that, today, okay, we're outside of this value area, we're below it, and moving lower right off the open, good sign that some trending activity is likely. But notice, point of control very close to the point of control from Tuesday. So now we have a new value area, and if we look at 2735s below us, kind of lines up with the highs from, about a month ago, middle of May. And so there should be some good support down here. You have, folks taking profits at the negative 23 and folks getting long at the 50% retracement. So that's kind of how I use market profile and the daily bars in conjunction with one another. I'm not really using market profile to place trades, mainly just to get a gauge of where might the market go, or what will be some good trading areas that I want to be active in. If we're sitting right on top of the point of control from the prior day, there's a good chance that we're not really going to move quite as much if we're inside that value area in a very tight range. But if we're outside of the previous day's value area, now there's a much better chance that, hey, if I take a trade just before we're approaching highs or as we're approaching lows, the chance of this trade breaking out is much higher. And so you can kind of use that to your advantage in just kind of weighing the reward to risk. So sometimes there's good-looking setups, but the reward to risk just isn't there. And then other times you have maybe places that the market is moving into open space, moving outside of resistance that yield a lot of reward potential. And so those trades are going to be more enticing, and I would want to be a little bit more aggressive. So that's kind of what I'm seeing for this week. We'll be back in the swing of things as usual next week, and then the following will be kind of a shortened week with the 4th of July holiday. So I wish everyone a good day, a good rest of your day, and a good day tomorrow trading. As always, Tuesday's live trading room is happening next week, and you can find all the details at eminimind.com. Thanks, and have a great weekend.